James, we just heard there that Narendra Modi, for the first time ever, are going to be relying on coalition partners. You say it's a buying opportunity, but is there now a bit of a warning label attached to that?
I think things get a little bit harder from here, obviously. So, as your correspondent highlighted, this is the first time that the Prime Minister will be in a coalition situation, and that clearly makes pushing through reforms more difficult and complicated. Having said that, I don't think it derails the broader India story. I think the foundations actually have been laid already in the first two terms of Modi's government, and that is what is and has been propelling India's economy onwards and upwards and turning it into a relatively brighter spot in Asia. And I don't think that this outcome changes that. It will introduce some volatility in the market, as we are seeing already in the near term. But our medium-term view is that the outlook remains positive for India.
Yeah, and to reinforce your point, as you're speaking there, we're seeing futures there for the Sensex, other markets as well, in positive territory, suggesting we're going to have a rebound from the selling that we saw a little bit earlier. But if we take a look at this chart, I'll describe it for you. It shows forward PE ratios for India, 23 times earns, so pretty expensive. When you look at that, do you still say, well, that's an entry point, or do you wait for a pullback and buy the dips then?
I mean, I would always kind of try and buy the dips, and there's no doubt that India is an expensive market, but it's always been an expensive market. It's always traded at a premium to other parts of Asia and emerging markets, and that reflects really the long-term growth opportunity. And as I say, that's undimmed in my view. I think the best approach is to look at this on a sort of stock-by-stock basis, and we have seen some very sharp moves, and valuation multiples compress quite nicely, and that's where the opportunity is, I think, amid all of this volatility and near-term uncertainty.
Well, ahead of this, we often talked about the Modi stocks, particularly around infrastructure, finance as well. But now, as we were discussing, he's got a couple of coalition partners to consider. So, in your view, does this change the reform agenda, and does this change the way you view what's investable in India?
I think you have to rethink it a little bit. Our base case was that there wasn't going to be any big bang reform. Maybe had we seen Modi come home with a thumping majority, that could have changed the narrative, and some of the thornier kind of areas could have been tackled in this third term. I think that's now unlikely. So our expectation is that we'll see a sort of continuity of reform and policy, and that will be broadly supportive for the Indian economy. Having said that, so far we've seen a big emphasis on infrastructure spending, to your point, around those stocks doing well, and government spending around capital expenditure generally. That may moderate a bit, and we may see prospects sort of dim slightly there, although I think there's still a good story around the infrastructure and kind of capex cycle in India. So we'll monitor that. In contrast to the earlier points made in the earlier segment, as the government takes note of voters and shifts towards focusing on the rural economy and that very large segment of the population, that may be positive for consumer spending and consumer-related stocks in rural India, which has been lagging quite considerably in recent quarters.
So those are the ideas for areas to look to invest. Are there any areas that you'd be avoiding in India right now?
I think, I won't say avoid, but I think where you have to tread with some caution will be around some of the government-owned companies. We're still waiting to see what sort of deal's been struck by the Prime Minister in forming his coalition, who's going to take the key appointments in the sort of key ministries, and whether that changes the outlook for some of the so-called PSU stocks in India. So I think there I would just tread a little cautiously, and we have relatively light exposure to government-linked stocks. So that's one area. I guess the other would be, again, just to tread with caution, would be in the small and mid-cap segment of the market. It's massively outperformed over the last year to 18 months. Valuations have got frothy there, even in an Indian context. And whether, some of the retail investors and a lot of the flows have been domestic and retail driven, whether they feel a little gun shy off the back of this election, we may see a moderation in that part of the market too.
Okay, well, we've got a Reserve Bank of India policy at the end of the week. All the noise from the election campaign is now out of the way, but I know you note that the economy is still under pressure. We've still got a situation where inflation is sticky. What are you expecting to hear?
Yeah, I actually think, inflation's sticky, but not at particularly concerning levels, and it's been, stable for quite some time now, and India is used to higher inflation. So I would expect probably we'll see continuity in monetary policy as well. And actually the economy, has been performing pretty well, so it's not as if there's a strong need to come through with some loosening of policy to support it. I think we've seen very solid growth at an economic level, and corporate earnings have been reflecting that as well.